Okay, so just want to get the latest on the devastation sweeping Japan right now after its largest ever earthquake, 8.9 in magnitude, as we've been telling you, unleashing a tsunami, waves of up to 10 meters high on Japan's coast. That has triggered landslides and widespread flooding. Just look at those pictures. You can see the land just immersed in water there. Homes in Japan have been washed away. As you can see, the inundation stretches a mile inland. Dozens of people have been confirmed dead. Many others are injured. Tens of thousands evacuated. Now, fires are spreading across the region too. There have been around 20 reported in Tokyo alone. That was the explosion at an oil refinery, Ichihara, near the capital. Transport and power networks are down across Japan's northeast. Japan's Prime Minister is now mobilizing the defense forces. I want to bring in my guest, Hongbin, Chief China Economist at HSBC. Of course, you're an expert in this region. Remarkable pictures that we were seeing there.
Yes.
Of a fire at an oil refinery, the Cosmo refinery in Japan, flooding, tens of thousands evacuated. What do you make of all this?
It's clearly a tragedy for Japan, for Asia. But in terms of how markets going like the response, I think if the past experience is any guide, the market tend to have a temporary response to this kind of the national disaster, and that's going to basically become calm very quickly. If we may recall, a couple of years ago, China also have kind of one of the biggest earthquake, and the market is down by 3 to 4%, during that kind of a couple of days, and then things starting to basically to calm down. The reason is that actually the natural disasters tend to have kind of minimal impact in terms of economic growth.
So tell me more about that then.
Of course, it's going to cause the loss in the assets, even on the human beings' life. That's very bad. But after the earthquake, you're going to have a kind of reconstruction of this that actually boosts the activity, increase the activity. So from a growth perspective, national disasters tend to have a less negative impact than many people generally expected.
What about global market reaction, if I can ask you about that? I mean, we're seeing a lot of nervousness, a lot of jitters on the markets right now, given that this has come at a time when you have escalating tensions in the Middle East, a so-called day of rage in Saudi Arabia, and European debt concerns resurfacing again as well.
Yeah, if anything in particular, this couldn't become the worst time, particularly in light of the recent oil price surge. Clearly, it will increase additional kind of uncertainties to the global market today or in the next couple of days. But again, I think basically, if you look at the past experience, I don't expect the kind of major kind of corrections or major impact from the financial market point of view.
Now, if I can ask you about China,
yeah.
We had some eco data today, inflation beating forecasts, prices in China are rising. Can we conclude then that tightening measures, efforts by the authorities to bring prices under control are simply not working?
More need to be done. I think probably China, there's more work to be done in terms of tightening policy, in terms of to continue to step up the supply side measures to deal with the food price inflation. That's the key message from today's data. So I don't think this is basically suggests that there's a failure for the policy approach, but nevertheless, I think it means that there's still pretty big task for the Beijing to step up tightening measures if they want to put inflation under better control.